What's going on, guys? It's Andy here. Welcome back to another exciting episode on the Andy Kandola Show. So today I want to go ahead and share with you guys the stocks in my portfolio that pay out a dividend of over 7%. Now I'm going to share with you guys 5 stocks in total that I have in my current portfolio. All these stocks I do believe in. My portfolio is focused on dividend growth stocks. So these stocks are all going to be the highest stocks in my portfolio that are paying me out the highest dividends. Now, if you're new to the channel, my goal with this channel is to go ahead and be transparent with you guys and show you guys everything that I own in my portfolio, as well as look at some different ideas as far as investing in the stock market and take you guys on the journey as far as where this portfolio will go. But before we go ahead and run into that, let me go ahead and share with you guys my portfolio here. Now, I call this my bucket list portfolio. All the stocks in here are going to be paying out a dividends. Now, I've made a bunch of changes in this portfolio, guys, so I will go ahead and share that with you guys, but I am selling 7 of my stocks, and then I'm reinvesting that money into 15 different stocks that I already have in my portfolio. So this is very big deal because I've owned about 62 stocks for a little while now, and I'm going to be reducing that down to 55 stocks. But in regards to what's going on in the portfolio here, in the last day, I have lost some money and I am down about $203 in the portfolio, and the portfolio is sitting at $47,533. In the last week, I am up $392 or 0.84%. In the last month, the portfolio is up $1,455 or about 3%. Last quarter, the portfolio is up roughly 10% or $3,070. And then all time, guys, the portfolio is up 12% or $3,296. Now, if you do want to see any of the stocks in my portfolio, I will have a link down in the description. Basically, you can go ahead and see all the stocks that I have in the current portfolio. Now, this is all with M1 Finance. And if you're interested in M1 Finance, highly suggest it. It's one of the best platforms as far as for a dividend growth investor. You cannot day trade with M1 Finance, and you basically can't buy real time. You do have 2 different windows, as it shows right here, to go ahead and buy and sell out of a stock, but it is a really good disciplined type of platform for a dividend growth investor. Now, I have my portfolio broken up into the 11 different sectors within the S&P 500. I have changed some of my allocations because I want to focus more on the growth strategy as opposed to income without growth. Basically, my focus primarily was to go ahead and focus on income as opposed to growth and income. So I'm changing my strategy around a little bit, but still it's going to be sticking with dividend growth stocks. So what that means is I'm focused on income, but at the same time, I do want to see growth in those stocks. And that's because I still have about 20 plus years before I go ahead and start even getting income from this portfolio, because at the end of the day, I do want this portfolio to go ahead and pay for all my expenses. But in the meantime, I do want to go ahead and see growth and income. Now, in regards to the trades that I'm going ahead and making in this portfolio, I am selling out of 7 stocks. And the 7 stocks that I'm going to be selling out of is going to be Gilead Sciences, Federal Realty Investment Trust, Sun Life Financials, Goldman Sachs, 3M, Canadian Imperial Bank of Commerce or CIBC, and then Archer Daniel Midland. Now, the reason why I am selling out of these stocks is when I looked at the charts and the growth of these stocks are really not growing. They're more steady income stocks as opposed to growth income stocks. So because they no longer fit within my strategy, I want to go ahead and change out of those and go ahead and invest in stocks that are still paying me out income, but at the same time, they're growing at a lot higher pace. So I am reinvesting that money into the following stocks here: Moody's Corporation, United Healthcare, Union Pacific, Digital Realty Trust, Waste Management, JP Morgan Chase, American Express, the Toronto Dominion Bank, Aflac, Medtronic, Crown Castle International, Clorox, Procter & Gamble, Prologis, and Cisco. Now, all these stocks are going to be higher growth stocks, but they all do pay out a dividend as well. Now, just in the last couple of days here, I did have some dividends come into the portfolio. From CIBC, I got a dividend of $3.81. From Cisco, I got a dividend of $3.20. And then from Comcast, for $2.89. And some of the other dividends I've already shared in my previous videos. So this is basically just an update here, guys, as far as all the changes that I've made in my portfolio and the overall strategy long term. Now, I highly do recommend to stick with one strategy. I actually did not change my strategy till now since I started investing in this portfolio. It is good to stick with the strategy, but at the end of the day, it's understanding that what is the ultimate goal. And for me, the ultimate goal is not to go ahead and start having this portfolio give me income to pay and cover my expenses for at least the next 20 years. Now, just jumping into the 5 stocks. The first stock, and we're going to go ahead and start with the lowest dividend stock and then go to the highest dividend stock, but all 5 of these stocks are going to pay out a dividend of higher than 7%. But the 5th stock on the list, and this is one of my favorite stocks, is going to be AT&T. Now, with AT&T, this is one of my prime holdings within my portfolio. This stock does pay out a dividend of 7.03%. And I personally really like this company because AT&T is one of the largest communication companies within the industry. And basically, if we go ahead and look at the overall stock price here, the stock is currently trading at $29.57. In the last 1 year, the stock is down about 13%. But if we look at their overall yield, the stock is paying out a really nice dividend. And the other reason why I really like AT&T is because this is considered a dividend aristocrat. Basically, with the stock, they've been paying out a dividend for over 36 years, and their overall growth rate is 2.09%. And like I said, the best thing I like about the stock is because it pays a very solid dividend. Now, AT&T does have very good cash flow, and they basically had some mergers, and some of the mergers went really well and others did not, and that's why the stock price hasn't climbed as much. But AT&T did have an acquisition for Time Warner Cable, which was not a bad acquisition, but then they had another acquisition with DirecTV, which was not a good acquisition. So because they spent so much money on the acquisition of DirecTV, the stock price did not climb up, and they're still paying for that currently. But I do like the stock overall, and this is one of my primary stocks within my portfolio that I'm looking to go ahead and build over time. Now, ultimately, in the next 5 years, I do see the stock going back to at least $40+. But because I really like the dividends of the stock, this is a stock that I'm just gonna keep investing in long term. And now let's go ahead and jump into the next one. And let's go ahead and jump into the 4th stock on my list. So the 4th stock on this list is gonna be Pembina Pipeline Corporation. Now, Pembina Pipeline Corporation is another stock that I hold in my portfolio, and yes, this is another stock that I really do like, and it is a safer stock, so it does pay out a dividend of 7.58%. Pembina Pipeline Corporation is the largest pipeline corporation in Canada for gas pipelines. Basically, they are in the energy sector, but they are diversified, and they basically are the largest storage facility provider for gas and oil, as well as they're the largest transporter of gas and oil in Canada. So with Pembina Pipeline Corporation, as we can tell here, just in the last 1 year, the stock was on average trading at right around $37 to $40 per share. But because we took a hit because of this current pandemic, this stock did go down in price, and right now the stock is trading at $24.56 per share. So I am looking to go ahead and dollar cost average into the stock. I do want to own more of the stock in my portfolio, and long term, with the safety score that the stock has, I don't see the stock going anywhere anytime soon. And I personally really love their dividend at 7.49%. And this stock has been consistently growing their dividend as well. For the last 4 years, they've grown their dividends, and their current dividend growth rate is 2.85%. So guys, this is gonna be the 4th stock in my portfolio, paying me a dividend of over 7%. Now we are gonna go ahead and jump into the 3rd one. And the 3rd stock on the list is gonna be one of my favorite stocks in the financial sector, and that is gonna be Main Street Capital. Now, Main Street Capital pays out a dividend of over 8%. It pays out a dividend of 8.14%, and this has a safety score of a 62. So this is also another stock that's considered pretty safe here. Now, Main Street Capital is basically a small investment bank. The way Main Street Capital goes ahead and makes money is they're considered a BDC, which is a business development corporation. And with a BDC, they go ahead and lend out money to small cap and mid cap companies. And when they go ahead and lend out money, they go ahead and charge interest on that money. And when that money is returned, they go ahead and profit off of that, and they go ahead and share the profits and the revenue in dividends. So their dividends are pretty solid. And additionally, Main Street Capital also goes ahead and does invest in some of these companies as well. So as these companies grow, Main Street Capital does go ahead and make money that way as well, as far as getting revenues from the growth of those companies. So I really do like Main Street Capital, and as we can tell here, just in the last year, Main Street Capital is still down, another stock that got hit from the pandemic. So I do see the stock in the next 5 to 10 years go above $50, if not more than that. This is a very strong company because they've also been tested with time, and they've been consistently growing their dividends as well. If we look here, in the last 4 years, Main Street Capital did go ahead and grow their dividends. They're also growing their dividends by an average of 2.86% if we look at the last 5 years. And of course, their dividend, I mean, you can't get a better dividend than this for a safer stock that's also growing. Oh, and I cannot forget to mention, Main Street Capital is a monthly dividend stock. That's another reason why I really like the stock, because they do pay out their dividends on a monthly basis. And now let's go ahead and jump over to number 2. And the second stock on the list is gonna be Altria Group. Now, Altria Group pays out a dividend of 8.27%, and their ticker symbol is MO. And their dividend safety score is a 55. But with this company has been around for a very long time. And if you're not familiar with Altria Group, basically they're one of the largest distributors for tobacco, and they did have a new acquisition recently in the last year, which was Juul, which was an electronic cigarette as well. Now, Altria Group, guys, has been around for a very long time, and this company is actually considered a dividend king. And what that means is that this company has consistently been paying out a dividend for the last 50 years. That's an extremely huge deal here, because this company consistently grew their dividends and has been paying out their dividends for the last 50 years. And additionally, if we look at Altria Group, this is really awesome to see as well, because their dividend growth rate is over 10%. So over the last 5 years, this stock has been growing their dividends over 10%. And I mean, how can you get better than a dividend yield of 8.27%? Now, with Altria Group, I do see some small challenges coming up in the near future, but I do believe that overall they have passed the storm. And at this point, this company is basically rebounding, and they're figuring out different ways to go ahead and invest and go ahead and grow the company. So I really do like this company long term. But yes, in the short term, this company has taken a hit. And if we just look at their overall stock price, the stock has not performed as well in the last couple of years. Overall, in the last 1 year, they're down as far as their stock price goes by 14%. 5 years, they're down about 23%. And if we look at the last 10 years, they're actually up 87%. So I do see a lot of upside for Altria Group, and I believe the downside has already factored into their stock price. Now, guys, let's go ahead and jump into the stock that's paying me out the most dividends in my portfolio. And that stock is going to be, drum roll, and that's going to be Exxon Mobil. Now, Exxon Mobil, if you're not familiar with Exxon Mobil, they're basically the largest gas and oil supplier within North America. Exxon Mobil has different brands that they own. They own Exxon, they own the Mobil brand, and they also own the brand in Canada called Esso. Now, Exxon Mobil, I do have a personal relationship with, because I do own a gas station, and it's a Mobil gas station that I've owned for a long time now. And with the stock, because Exxon Mobil is the largest player in the market and they have a competitive edge, I do like the stock. And if we look, guys, I mean, this stock is paying a dividend of 8.31%. That's a very nice dividend, and the dividend safety score is a 55. And on average, if we look here, the stock in the last year has been growing by 6%. And if we just pull up Exxon Mobil, this is another one of those stocks that has just consistently been growing. Now, currently the stock is trading at right around $41 per share, but they're also considered a dividend aristocrat because they've been paying dividends and growing their dividends for the last 38 years. Now, of course, this sector and the energy sector has been hit a lot lately because less people are actually going towards gas cars and more people are starting to go ahead and purchase electric vehicles. Now, I do own an electric vehicle myself, and I know that sounds a little confusing because owning a gas station and then having an electric vehicle is because I don't like to pay for gas, and I like to basically focus on saving money whichever way I can. Now, as Exxon Mobil goes ahead and grows, I do believe that this company is going to have to go ahead and diversify their income even more. Now, we're never going to be able to go ahead and get rid of gas and oil altogether. So this company, because they have a lot of free cash flow and they just have extremely good financials, they're going to be able to go ahead and diversify their income into many different ways. So I don't see this company going down. If anything, over the long term, I do see ExxonMobil growing in the next 5 to 10 years. Now, currently, because the stock is trading at right around $41, they did take a hit because of this pandemic. I do see the stock climbing to over $100 per share in the next 5 to 10 years, because I do believe that the stock has already factored in everything that's going on as far as the electric vehicle industry taking some of their profits away. But guys, these are basically gonna be the 5 stocks that I currently have in my portfolio that are paying out a dividend of over 7%. Now, hopefully you guys enjoyed this video. Now, I do have a new series on my channel that I have recently started as well. If you do want to go ahead and share your portfolio, I have an email down in the description. I'll basically go ahead and give you guys my take, if it was my portfolio, on some of the things that I would go ahead and do with that portfolio. It's basically a new series that I go ahead and review different portfolios in. And additionally, guys, if you are new to the channel and you like videos all around the stock market, make sure to subscribe to the channel down below, and do not forget to hit that like button, guys, as it really does help keep me motivated to keep producing new content. But thank you guys for watching this video. If you are interested in M1 Finance, like I said, it's a great platform for dividend growth investor. I will leave a link down below where you can go ahead and get free $10. It is an affiliate link, so it does help the channel out as well. Again, thank you guys. I will see you guys at the next one.